Okay, hello and welcome everyone to the first of many, hopefully, of a weekly market wrap-up webinar. I'm Liam, and this is the first sort of time I've been doing something like this, so please bear with me if it does seem a little bit funky or whatever. Practice makes perfect, right? So we'll see how we go. Hopefully, keep this going. All right, so first things, let's get straight into it. I'll try and keep it short and sweet because I've got a fair bit to get through. So first things first, S&P 500 this week has had a killer week. Look at all this green here, just hitting all-time high after all-time high. Don't even know how high it's going to go. It's just crazy at the moment. One thing to watch for this chart, some people will say that this looks a little bit like a bearish wedge, just the way that the lines are moving. The lows are moving up and the highs are slowing down. So just something to watch out for. May not come to fruition considering things are looking good economic wise and virus wise. So just keeping an eye on this for now. Hopefully we can continue this positive trend, but we can't really make money if well, we can, but we need corrections and cool offs in the markets just to keep a nice balance. All right, so some things economically to look out for. First things first, moving into Q2 next week. Crazy. Q1 wrapping up. Companies starting to report next week, starting with the banks. So keep an eye out on some earnings. Just be careful with earnings plays. Really hard to pick which direction the market will move, especially these days. It's really funny how people are reacting to reports at the moment. We can see companies making really good earnings and then the stock just tanks. So just be very careful there. Bit of a gamble if you're taking those, in my opinion. Next thing is the infrastructure bill that came out not too long ago. I do have a bit of a picture of a breakdown of it. I don't have it with me at the moment, but I will add that into the comments so you can have a good look at that. A big fraction of that is going towards defense, which is interesting. So look out for some of those defense stocks in the next couple of weeks. But you can take a look at that when I put it on the comments. Economic numbers looking good as well, moving in the right direction. GDP numbers going up, gross domestic product, and employment numbers heading in the right direction too, which is a good sign. A couple of things that I'm looking out for, just as a negative side of things, just protecting your downside, is the corporate tax percentage that Joe Biden's proposing for big corporations. That'll be something that will affect revenue and earnings. And the other thing was just the amount of for me personally, people that I've talked to don't see this as much of a concern, but for me personally, I'm just a little bit worried about the amount of capital flowing into the markets at the moment from possibly not so knowledgeable traders and investors, if you want to say that. There's a lot of people that I've heard just on the street and that have just talked to me, not knowing that I trade, about what they're buying and why they're buying it, and crypto and all this crap. And I'm just just people that I would never thought would have traded. So I'm just keeping an eye on that, just to be careful. Hopefully there's no bubble. Probably is. Probably burst at some point. We're seeing it a little bit with the housing prices and stuff as well. But just keeping an eye on it for now. It doesn't mean we can't trade. We just need to protect our downside, basically. Anyway, moving on. Let's go to the sector breakdown. Okay, we'll just go through this very quickly. First of all, we've got, before I go into that, these are all ETFs representing the majority of the sectors. So first things, we've got the SPY, the red line there with the shadow underneath, the S&P 500 ETF, with Energy sitting all the way up there at the top, sitting pretty at plus 26% roughly, with financials sitting just below that, plus 20%. They're having a bit of a screamer lately, which is good for them. Next, communications and internet services. Then industrials below that in grey. Then we've got real estate after that, with materials sitting just above the S&P 500. Then below that, tech lagging behind a little bit at plus 92% for the year. Sorry, this is just zoomed out a little bit. Plus 9% for the year, with healthcare just below that, sort of lagging behind a little bit, and utilities at the bottom there, plus 3.4% for the year. Utilities, they are a heavily regulated sector, so sort of understandable why they are lagging behind a little bit. Okay, moving on to positions opened and closed for the week. So let's pull up my normal chart. Here's my normal chart that I look at. So I'm going to bring up my open positions for the week and just quickly talk through those. So first one, we've got Qualcomm. So I took this position around, I think just around this area, just above the 50-day moving average. Sitting in the green slightly at the moment, which is really good. Hopefully this momentum can continue upwards, and looking to take profits around at least 145, next being around 148-ish. Happy to take that move. Next one opened was STX, Seagate Technology. So this is one of the Davis Box strategy plays that I've been testing out recently. Sitting pretty at the moment. I took this position just above this box breakout, and it's sitting nicely around $2 in profit at the moment, which is really, really nice. Happy with how that's going. Only thing worrying me at the moment is just the lack of volume here, and then earnings coming up. So I'll be looking to protect that position, maybe set a profit stop in the next few days. They're the stock positions I've opened up this week. They're the only ones. Been a little bit conservative this week. Just haven't really felt comfortable with the movement in some of the positions. So been a bit conservative, maybe a bit overly conservative, but better to protect your capital than to throw it away. So next of all are some options positions that I've opened. So first things first, AMD. So with this stock, I've sold puts, or written options, written put options, whatever you want to call it. And I've wrote that options contract at $73, just below this nice little support line here. And that will be expiring at the end of next week. So sitting pretty for that one for now. Not too fast if that goes in the money. Okay for my account size. And yeah, really nice company doing well. All right, so I'll keep an eye on that one anyway. Next option position opened was Nike. This one was a little bit risky for my account size just because of the stock price. If that one was to go in the money and I was to exercise it and take the stocks on, that would be $12,500 worth. So I need to be careful on this one, keep an eye on it, but I've set that strike price just below this big dip that they took on their earnings, even though they beat, as I was saying before, that's the earnings gamble at the moment, and just below this 200-day moving average. So pretty confident in that one. We'll keep an eye on it though, just because of the stock price. Okay, next couple that I opened this week. CCL, Carnival, Core, the cruise line. Opened a long range put option on this one with a strike price of $15 and expiring on the 15th of October. So that's quite a dated put option there that I've got, but looking to squeeze the theta out of this one. With my account being a little bit smaller in size, I've got to sell options that are a little bit cheaper than the big companies. So for example, this one, so that if it does go in the money, I do have the ability to take on the shares. So if it does go in the money, I do have the capital to take on the shares comfortably, and I'm happy to do so. So what that means for me is the smaller the stock price, not necessarily the less volatility, but the less premium that I'm going to get for my stock options that I sell. So I'm testing a little bit of a strategy at the moment, looking to, as I said, squeeze out some theta over time and sell further out dated expirations on those options, and then hopefully over time, as it gets closer to the expiration date, I'll be able to close those off for a profit. Not looking to ride out the whole period there, just until I make a decent gain. Reason I've sold it on this sort of company and a couple that we're going to take a look at soon is because it's still sort of beaten down from that March area. Things are looking up with vaccines and all that sort of stuff, people moving around. So I'm pretty confident in this one that it's not gonna come back down around this area. But again, I'll just keep an eye on it. Okay, next one that's giving everyone a headache at the moment. Palantir. So sold this put option expiring on the 19th of November for $12. So for that to go in the money for the options holder, the stock price is gonna need to lose 50% between now and then, or just under 50%. Now that's a huge drop. So I'm pretty confident in that. I'm pretty confident in the company as well. They're really innovative, and they seem to be one of those really switched on companies from what I've read and what I've researched at the moment, and what sort of my community has been talking about as well, which is exciting. I'm keen to see how things work out for these guys. I do have a couple of a few holdings of this company as well, just as stocks in my portfolio too. But as I said, opened this $12 put option, expiring November. Another theta play just to squeeze out that theta over time, and then close it off as it gets closer to expiration, and that unrealized profit increases as time goes by. Okay, they were the options contracts opened for this week. Just take a quick look at a couple of the closed positions this week. So Apple's had an awesome run this week, hit one of my profit targets, sold off half the position, letting the other half run. Not sure how high this will go. They've got earnings next week, so need to be careful. Or not next week, in a couple of weeks. So just need to be careful on that. Might see resistance around this area, around 137-ish. If it can push through, maybe around 143. If it can push through that, then it can go bonkers. So we'll just see how that turns out. So yeah, letting that other half run. Okay, next one, TCFC. Mentioned this in the group the other day. Did close this off for a loss. Unfortunately, I was trying some Davis box methods on this. I was holding it for a little while. I think I opened around this area here. and it did drop off, or maybe I opened it here, that's why I have that line. Oh no, that's the previous resistance. Yeah, I think I opened around here, and it did close off around this area here anyway. Maybe it was here, who knows. Anyway, around that area, testing out some Davis box methods, which is a trend following strategy. Didn't quite work out on this one, but it is working out nicely on some of the other positions, like the STX position, Seagate Technologies, that I brought up before, the position that I opened this week. Only a small loss on that one, which I'm not too fussed about. Got to take some small ones. A little bit unfortunate with this one with the big push in volume here. Okie dokie, next let's have a look at some trade ideas for the week. So I'm going to try and run through these quickly because I've got a few on here. These are all the ones here. Okay, so the different flag colors, they represent different strategies. So let's go first things first, DocuSign. Looking to see if this momentum continues. A little bit of a push up in volume over the last couple of days. Hopefully that will continue above these trend lines. If it can push over there, that should be a pretty strong push towards the upside. But we'll see how we go. I want to see how Monday opens and how the broader market and the futures look on the US Sunday night. Monday, sometime I bloody get confused about the time zones, but see how the futures open and how they're looking, and the news and stuff from the weekend, see how the broader market's looking before taking this position, because it is a little bit of a higher price stock. If I were to take this, I'll be setting a stop around this area here, around 182, 185-ish. So if we do get a big drop there, that's a lot of money on a small position. So yeah, I just want to see how we go with that one first. Okay, next one, Fastly. Keeping an eye on this. Not looking fantastic though. Big drop here. Tried to push up. Didn't quite make it. Back down. Tried to push up again. A lot of lower highs. Bit of a downtrend here. Unfortunately, not looking fantastic for Fastly. But if we can get some good news from them, and or a bullish push towards the upside, could take a couple of bucks there in alpha, but we'll see how that goes. It's looking like it's going to head back down. Does break this area here or this area, well, probably this area actually. If it does break that, yeah, it's not looking good for the company, unfortunately, but keeping an eye on that for a bullish push to the upside. Next one, Spotify, same sort of thing, hitting a little bit of a double top here. A little bit skeptical in this one, especially with earnings coming up as well. It's had a good run so far. This one probably won't work out too well. Bouncing off the 200-day moving average as well. Pretty strong trend line, that one. So keeping an eye on it for now. If it can move up and it does break that 200, it could work out really nicely. But yeah, just being cautious on this one for now. Okay, next one, Teladoc. Okay, this one's looking good. If it can bounce back from here, if it can get a bit of volume push upwards, should be looking nice actually, which I'm looking forward to. Keeping an eye on it for now. Another one that's had a good run over the last year or so. But yeah, keeping an eye on this for now. I want to see some positive signs first before taking that. Next one, WD-40, big drop off of earnings. So their report this year was better than the same time last year, but they missed on estimates. So that's hence why we've got the big drop there. Bought up nicely though from the 260 range, $20 difference between that. Far out. Look at the difference in the ADR here as well. The ATR, sorry, average true range. Huge big spike up and massive volume as well. I'll probably take this one, to be honest, because they're doing quite well as a company. And this is a bit of a mean reversion play. Okay, next couple, sort of same thesis on these two. Okay, we've got FOXA, Fox Corporation, and Discovery Inc. Both looking kind of similar in the charts there, getting wrecked after that hedge fund got blown up from having too much leverage and holding too much of these stock, and they had to get rid of it. So it has taken a plunge. Looking for people to buy this huge dip up though. We'll see how it goes. I want to see some positive signs from this first before taking a position. All right, Fox Corporation's looking pretty good. I might take a little position there and set a stop around here. 35 probably around there. Set a stop around there. See how we go. Only $2 difference. $2.50. So we'll see how we go. That one's looking quite nice though, actually. Now that I look at it a bit more. Alright, Discovery Inc. though, maybe not looking so good. Might come back down to this range here around the $30 mark. Next one, DraftKings, looking to follow this nice trend line up. It's been respecting it nicely. I'll probably take this trade as well and set a stop probably just below this recent low, or the second recent low around that 57.50 mark, or just below $57-ish. And then hopefully ride this up nicely. And then just, setting profit stops as we go, or trailing stop, set up a trailing stop as well, could do that. Next one, Target, same sort of thing. Looking to ride that that trend line upwards. Did take a bit of a hit there over the last couple of weeks when we saw that huge dip in the broader market, but has since then came straight back up and started to respect that line again and beat on earnings as well, which is good news. Okay, next one. These ones here are Davis Box strategies or methods or whatever. Looking to utilize that strategy. Okay, Bank of America looking pretty good. Only thing to watch out for this week is earnings. That will be on Wednesday or Thursday. So yeah, I'll be looking out for that and watching the volume here as well. Probably won't take this one just yet. See how earnings turns out. Don't want to be taking this after this huge run and then earnings disappoints, because that will come back down. So keeping an eye on that for now. Okay, Cisco, this one's looking nice. So we've got a nice bullish run here, hitting a 52-week high, coming back down a little bit, seeing a little bit of resistance there. So that's a little bit of something to watch out for. But after that, looking to form this nice little pennant here. So these that I've been charting over the last couple of months usually have been turning out really nicely, and of course I haven't been taking them, so I'm looking to change that now. Probably take this position and look to set a stop around maybe this area here, around probably just below that 50 mark. So the box here is the Davis method, or Davis box strategy, paired with that pennant. So that's a couple of good little indicators for me to take that trade. We'll see how that goes. Hopefully it goes well. Dell, another one looking really good. Had a nice little run since March. I think it's up like 230 something %. Let's have a look. Forgot you don't have to hold it. So over 387 days, about 275%. Crazy, absolutely crazy. So had a mad run, utilizing the Davis box as well. Probably take this one, see how we go. Only thing worried about is just the lack of volume here, but it has had a little bit of a push on that big green candle, just breaking out of that box. So probably liking that one, actually. I might take that, at least with a small starter at least. I'll be looking to be careful around the 100 mark. That's a big psychological number. Next one, HP, had a mad run as well over the last year and a bit. Another one looking good, breaking out of that last box. Nothing seems to be slowing it down. Boxes are pyramiding up nicely, looking good. Only thing is just the lack of volume that I need to keep an eye on. Next one, Pepsi. All right, this one I've got in here for the pennant that it is forming here. Another one that I'm looking to take here. The only thing I need to be careful of, and I'm worried a little bit about, is just this earnings in 4 days. So I need to be careful of that. But if it can break this line, I'll be looking to take that. Okay, next one, these purple ones, these are all options positions that I'm looking to open this week. So these are just put options that I'm looking to sell. So first one, Delta Airlines, airline company, still sort of beaten down since last March. Okay, I'll probably look to sell around 37-ish or around 27-ish. I haven't really looked too much into that yet. We'll see how we go next week. But yeah, probably looking to get some theta out of that, so time value out of that. So probably a little bit longer dated on that just because it's a bit lower in price. Next one, Dropbox, another one, probably a theta play. The swings are a little bit bigger in this one, so I might be a little bit more careful on this. Maybe selling around $20, $20.50, or this 1750 mark, probably another longer dated option play to squeeze out that theta. Okay, theta means time, if you guys didn't know already, time value. So basically, the longer that you hold an option, the more it decreases in value. Okay, and the more premium that the option seller accumulates. All right, so Federal Realty, same thing again. It's probably sell around this $81 mark. A little bit higher in price, and might not put this too far out, but around that 81.50 area. Another company that I don't really see coming back down to this area from the lows of March. Still sort of beaten down from its average sort of area there before COVID. So that's my thesis on that one. Hyatt, same sort of thing. Probably 65, sell around 65 or just below at 63, below this previous resistance here from pre-COVID. Nice little pennant forming here as well, something to look out for. Not a real strong one though. Pfizer, probably sell around 32 after all the vaccines it's been making and supplying to the globe. Pretty happy to take 100 shares of this bad boy at $3,200 in value. Yeah, see, good things, some good numbers coming out of these earnings, so I might even take a position beforehand. Probably priced in, to be honest, but I just don't think the scale of what they will have made as a company over last quarter and next quarter will be able to be scaled in. I just can't even imagine how much they've made over the last little while. Okay, next one, RCL, same sort of thing, beaten down still. Probably sell around 64, longer distance. Okay, next one, SRNE, a bit more of a riskier one. Huge swings in this one, being a therapeutics company. Sell around that $5 mark. Maybe a longer one out. Might scrap this one. We'll see how we go. See what the premiums are like. If it does go in the money, $500 worth of shares. Yeah, I'll take another look at that one next week. Last one, AT&T. Good company, still beaten down since March. Not really recovered all that well. Probably sell around 28. Happy to take the shares on this if it does go in the money. $2,800 worth. good dividend payer. Happy to take that one on if it does go in the money. Worst things come to worse. Probably get around to here, $26, like $200, before it swings back up, I would imagine. So happy with that one. Alrighty, lastly, let's go on to some of the tickers that you've asked me to look at. I've got a few here. One of them that I was actually looking at for this week as well, Disney. This is setting up nicely. Nice little dip here from the highs around the 200 mark, just over. Dipped down here over the last couple of weeks. Forming a nice little pennant here, not as clean as some of the other ones we've seen there, but still a nice little pennant. So yeah, I might be looking to take this one, setting my stop around this 180 mark, so $7 below current price. Yeah, looking good. I would take this one, but just be aware it has had a big run. So if it does curl over, make sure you get out before it drops back down. Okay, next one, MU Micron. Okay, so obviously been looking at this for Davis Box strategies. Okay, not looking too clean for the Davis Box methods. I'll probably just take this one off. Just give me a second. There we go. Looking like it's struggling a little bit around this area here, 95, and with this bit of struggle here, could struggle again around that $100 mark. So just be careful with this one. Has gapped up here since earnings. It must have beat. Oh no, they didn't. Still profitable though. A nice little gap up, probably just off this drop before earnings. Or yeah, before earnings. Just gapped up nicely on that little bit of a dip. Yeah, just be careful here. See if it breaks out above this area, and then if it does, be careful around that $100 area as well. Again, with this one, set your stops. We don't want this to fall back on you. Just be aware that chips are a bit of a shortage at the moment as well. All right, next one, Twilio. Haven't really looked at this one too much personally. Pretty highly priced stock, and about halfway between the recent low and the recent high. So I would say probably missed the move on this one, unfortunately. If it were me, I would probably let this one go, especially because of the stock price is so high. If I were to take this one, I'd be probably setting a stop around just under that $300 mark. So that's $68 difference between where it is now and that stock price. That's a big difference if that starts to turn over. But ask yourself, are you going to be comfortable holding that between the price now and the price your stop's in that? Just below that 200 day moving average as well. Probably let that one go. But again, it's up to you. Okay, a couple more that you guys have asked me to look at. Atos Therapeutics Company, $2, penny stock, pretty big swings. Yeah, not looking fantastic here. A bit of volume here. What's been going on with this one? Some sort of FDA approval or safe to proceed letter. Oh, here we go. COVID treatment nasal spray. Geez, that'd be interesting. Anyway, let's see where this thing's come from, because it's looking... Oh god, here we go. Oh no. Oh no. Where's that come from? Oh. Oh dear. Uh-oh. Far out. IPO price, first day, $910 a share, moving up to $2,230 per share, and now at $2.02 per share. Man, I would stay away from this one. That's all I'm gonna say. Look at putting your money in something that's that has a proven track record. It's more reliable. You understand the company well, or well enough to invest your money in. Don't look at these gamble plays because you're just gonna lose most of the time. All right, next one, BNGO. Looks like a biotech stock. Huge run, coming from a price of around 50 cents a share up to $15, $16. Looks like a huge pump and dump to me, unfortunately. Plus, not too long ago did they IPO. When was that? 2018, so a couple of years ago. They just had a huge downturn from there till March. Coincidence, till March of 2020 when COVID started, just consolidated all the way through COVID, and they must have had some sort of news here that's just pumped them, or someone's pumped them, or people have pumped them. What do we got? Public offering after public offering. Oof. Net loss of 11.7 million. Optical genome mapping. I'd have to look into this more, but again, it's another gamble looking thing, and you've got more of a risk of it coming down than going back up from here. Yeah, I'd probably just leave this one as well. Again, look at putting your money in something you believe in, something you understand, something with a proven track record. Don't treat trading like a gambling venture or a get-rich-quick scheme, because you're just going to get burned. Take it slow, take it steady, build your process. I'm still doing the same. I'm not perfect. I'm still learning. I've still got a lot of learning to do. But yeah, just be careful. Work on your process. Get better. Slow and steady. Small gains to start with. Build it up as you go. That's what I've learned so far. I've been burned a couple of times so far. One time very, very nastily. And I'll explain that in the coming time over the next couple of weeks. I'm sure I'll share that story with you guys. But yeah, for now, be careful, protect your capital. Okay, that's the number one rule before making money. All right, that's all I've got for you guys tonight. Hopefully you enjoyed that, took some value from that. I had fun doing it and doing the due diligence and analysis beforehand. Hopefully we can keep this going over the next few weeks and future to come. And yeah, let me know if you had any questions or anything like that, or you want to know more, or let me know your thoughts in general, because yeah, I hope you enjoyed it, and so did I. So have a great rest of your weekend. Hopefully another bullish week next week. See how we go. And yeah, stay cool. See you guys next week.